is vouchers. So I told you in previous class that whenever we do a transaction in business, there is a source document. Okay, there is a proof of transaction. You can say, like, if you have purchased something, then there should be a proof. If you have sold some goods to someone, then there should be a proof. If you have paid any service fee to someone, then you receive invoice for that. So there are many things like this that you get a receipt for any transaction. So these documents are called source document. Okay.
Yes, sir.
Okay. So when we talk about uh, when transaction happen in business, and it is recorded in the books. There are some documents related to transaction which work as a evidence or source document. These are called vouchers. So this is the definition. Okay.
Yes. So I should write this, right?
Yes.
Okay. So this was a definition for voucher, right?
Yes. This is definition of source document, and on the basis of source document, we create vouchers. Okay. So on the basis of these
Okay. So
source document, vouchers
okay. So this is source.
are created with the detail of debit and credit side accounts. This is source document and vouchers. So source actually the question sometime arise that what is source document then? Actually, source document is also a type of voucher. Okay, so on the basis of source document, we create a genuine voucher that is called accounting voucher. Okay, and accounting voucher. In that voucher, we write the details of debit and credit account because for every transaction, uh, let's assume one thing. First, when you do a transaction, let's say when transaction happened between these two persons, then this person, let's say this person is related to you. Now, if you create a bill or invoice, then you will create this bill or invoice according to your recording requirement. Means how you record transaction in your books. On the basis of that, you will create this bill or invoice. Yes.
Yes, sir.
Means what information you need at the time of recording, you will put all those information in your invoice. Okay.
Okay, sir.
Like let's say that when you go to a shop, okay, and you purchase something like grocery items. So at the shop, what problem you face, what are the things that should be written in the list of those items, you know this. Okay, so when you create those lists, then you'll write every detail like which item you are going to purchase, uh, and what are the quantity in units, piece, packets, kg, or anything else. Okay, so you will write these things according to your experience. Yes or no?
Yes, sir.
But if your family member will create this list, then they will create according to their needs. So in the same manner, if this bill or invoice is created by A and given to you, in that case, this invoice will not fulfill your requirement. Yes or no?
Yes, sir.
So that's why when we create our invoice, then there is no issue. If we are selling goods, then we will create invoice, then there is no issue. We will record on the basis of those documents. But when someone else will give his bill or invoice to us, let's say we have purchased some goods from someone, then he will give the bill. Okay, and bill may be or maybe not as per our recording requirement. So in that case, we have to create a voucher for it to record the transaction. So on the basis of that bill, we create a voucher, and at the time of recording the transaction, we will use the voucher. Understood?
Yes, sir.
So on the basis of this bill, we will create voucher, and this voucher will be used for recording purpose. But when we generate our bill or invoice, then you can directly use this bill or invoice for your recording purpose. So this is the voucher which is created on the basis of source document. So source document is also a voucher. Okay. But if it is not as per your information, not as per your requirement, then you have to create a separate voucher that is called accounting voucher. Okay. So this is your definition.
Thank you, sir.
Done.
So just one, 2 minutes. So should I write this also below the
This
drawing?
no. This drawing is okay. Now there are many types of source document you'll find. So types of source document. Now the first one is cache memo. Can you tell me what is cache memo? Do you know what is cash memo? Am I audible, Abdullah?
Yes, sir, you're audible.
But you didn't give the answer, the question I was asking.
Sir, I didn't hear actually. Like your voice came now, but before I guess it didn't come.
Okay. Actually, I said that you know what is cash memo, but now I have written it, so no issue.
Okay, well, like your voice didn't come.
Okay, so this is cash memo. When the seller sell its good for cash, then he issues cash memo. Okay, if he sell the goods on credit basis, then he issue invoice. Okay.
Yes, sir.
Okay, so the second is here invoice or bill. When goods are sold on credit basis, then invoice or bill is issued by the seller. So this is second type of source document. Okay.
Yes, sir.
Now third is called deposit slip, or you can say pay in slip. Deposit or pay in slip. So it is a receipt for depositing cash into bank. Depositing cash or check into the bank. So this is deposit slip. So these are the main source of document that one can find. The fourth one is debit note, which we have discussed in our previous class, if you remember. And the next one is credit note, debit and credit note. This is very important. It is generally asked in examination. So tell me, if you know anything about debit note, credit note, tell me. Hello, Abdullah.
Yes, sir.
Am I not audible again?
No, no, you're audible. Actually, I was like, my mom called me.
Tell me what is debit note and credit note.
Uh, Sir, I don't know, actually.
We have discussed this in our previous class.
I didn't note it down, actually.
No, but we have discussed this. So you don't remember anything at all?
So not exactly, sir.
Okay, so debit note can be issued by seller or buyer. Both can issue debit note. Now, when they will issue, it is issued when when we debit the amount in the personal account of seller or buyer. Now, what does it mean? It means that we have reduced the amount payable to someone, or we have increased the amount receivable from someone. Means we are debiting the amount. Let's say that this is our company and we have sold some goods on credit basis to B. The value of goods was 10,000. Now, after some time, we check the transaction and see that the transaction we have done, the goods we have sold is less value, means the valuation is not correct and the good should be valued at 12,000. Okay. So in this case, we will debit the account of B by 2,000. Means 10,000 is already receivable from B. And now we will add 2,000, means now B will pay 12,000 to us. So we are debiting 2,000 in his name. That's why we will issue a debit note to B stating that we are debiting your account by 2,000 because the goods was less at less valuation. So in that case, we will issue debit note. Now, in the same manner, let's say B purchased goods from A and the goods valuation was 15,000. So B purchased goods from A. Now B returned some goods. Returned 3,000 value, goods valued 3,000. So in this case, B will debit the A account by 3,000. Means now B will pay only 12,000. So he is reducing the amount payable to A. In this case, B will issue debit note to A. So you can see we are decreasing the value. Now amount payable to A is a liability for us, so it has credit balance. A account will have credit balance because the amount is payable to you. Now we have reduced it, so we will debit the account by 3,000. So this is one example. The first example here, this is second example. So the first example here is A sold goods to B for 10,000. So we have to receive money from B. It is our asset. So we will debit the B account. After some time, we find out that 2,000 is less written in the account. So we will add 2,000 on the debit side of B account, and the total amount receivable is 12,000. Understood?
Yes, sir.
When we sold goods, it will be B account debit to sales 10,000, and 2,000 will be added here. So debited. In this account, A account, it by purchase 15,000, and there is a return of 3,000. So here it will be again to sales. To return 3,000. So here it is debited 3,000, here it is debited 2,000. So in both of these cases, buyer or seller will issue debit note to the opposite party. Here A is issuing, A is seller, and seller is issuing debit note to purchaser. And here B is buyer, and B is issuing debit note to the seller. So debit note can be issued by any person, either buyer or seller, to the opposite party for the amount or account debited. Okay, so this is debit. Now, what is credit note? Same as the debit note, it can be issued by buyer or seller both. Credit note can be issued by seller or buyer both. It is issued to the opposite party to inform that his account is credited. Write all these.
So can you read the first line?
What?
Can you read the first line of cash memo?
When seller sell the goods for cash, then he issues cash money. Done.
Yes, sir. Can you scroll down? Yes.
Done.
Just one line, one line. Done, sir. So should I write this also below credit note?
No.
Okay, sir.
Okay. Now you have to remember all these, and debit and credit note, especially because this is the most important one in this chapter. So debit and credit note, please remember that what are these things. Try to understand. These things are very easy to understand if you have written this. Debit note can be issued by seller or buyer. It is issued when we debit the amount in the personal account of seller or buyer. Means when we deduct the amount, you will say. So amount payable, in that case, we have to reduce the amount, and amount receivable, uh, amount receivable, in that case, we have to increase the amount, and amount payable, in that case, we have to decrease the amount. So that is debit. It is just opposite of credit note. So in credit note, we increase the amount payable and decrease the amount receivable. Okay, so this is debit note, credit note. You have to remember all